we have this going on the insurance side, this battlefield. And then on the SaaS side, we have this maturity of these software companies who are embracing the ecosystem approach to where it's not just merchant services anymore. It's much broader, right? It's like, we're going to give you a loan. We're going to be your HRS
all
system.
of it. Yeah.
Yes. And it's the perfect, like we are at the perfect time for small commercial and insurance, right? And software to just come together. I'm David McFarland, CEO and co-founder of Coterie, and this is the future of insurance.
Business is anything but usual these days, but with VPay's claim payment solution, you can replace checks, reduce costs, boost e-payment adoption, and start realizing savings in just 45 days. Easy, safe, and smart. VPay, now a part of Optum Financial.
David, it's good to talk to you again. It's been a little while. Things have changed. You guys have grown a lot, but I'm excited to sit down and hear what's been going on.
Thanks, Bryan. It's good to be here.
Can you give people a little bit of your background? And then obviously I want to dig into Coterie's story a lot more, but who are you? Why are you sitting here? How'd you get to this point?
Yeah, it's not the typical actuarial journey. I started off, like I said, in the actuarial space, working for a company called the National Council on Compensation Insurance. And they're the NCCI. If you know anything about workers' comp, you know NCCI. And while I was there, I was doing a lot of actuarial stuff, data validation. And the two things that we really care about in workers' comp are what you're doing and how much you're getting paid. And me being an idealistic youth, I was trying to make my job a little easier. And I was looking over all these numbers, going through all these audits and whatnot. It's like, why can't we just harness data that's already in HRS systems, payroll systems, all that kind of stuff, just automate my work and make my life, agent's life, insurance carrier's life a lot easier. I didn't get a good answer while I was at NCCI, but I went to actuarial consulting and I got an answer.
Yeah.
And the two main reasons why we couldn't do that was, one, the tech is very difficult. And admittedly, for a lot of these legacy systems, the tech is actually difficult.
Yeah.
Didn't know at the time you can't just API stuff on top of other stuff. Doesn't always work.
When was this all going down? So when you say at the time, what is the time?
That was in the early 2010s.
Okay.
Yeah. And the other reason was channel conflict. At that time, there was a lot of movement and it still is, in the personal auto space to disenfranchise the intermediaries at the time, the agents and brokers. And in commercial, they really wanted to preserve that relationship. And they didn't want to introduce anything that looked like disintermediation.
Yeah.
And I agree with that. But the thing where I disagreed was I thought, one, we could build the technology. And two, we could actually leverage the technology to not disintermediate, but empower the intermediary to make their jobs even easier and produce even more. And that was the kind of fundamental idea behind Coterie. And then I got recruited to a company called Jewelers Mutual Insurance Company in Wisconsin. And they had an amazing idea of just embedding insurance in the places where it was relevant to the end consumer. And I thought to myself, what if we did this? Like, what if we met the consumer wherever insurance was relevant to them, whether it's in their merchant services system, accounting system, or if they're going to their agent and broker, right? And we leverage the data that's already in those systems to go ahead and make the policy issuance easier, make the ongoing servicing issue, make it easier for the intermediaries who are handling these policies. And do this not only so that we can really optimize conversion and the new business cycle, but also that we can make the experience on the servicing side that much better.
Yeah.
And long-term advantage being we get data that no one else has so that we can segment price and service in ways that no one else can. And that was the idea. That really crystallized what Coterie was going to be about. The problem is I had no idea how to start an insurance company, like most people.
It's the little things, the little
thing. Right? And it was around that time that a guy named Kyle reached out. He was like, "Hey, I've got this idea for point of relevance for embedded car insurance." And we met while he was at AmFam Ventures, and we ended up me and his co-founder, as well as the head of engineering, ended up getting together at the end of 2016 and starting a company called ClearCover. And that ended up going pretty well. Ended up going to Chicago, doing that, and still staying in touch
Kyle
with
was on the
Kyle.
show June of 2021, and he's in my second book. But yeah, so for people who are curious about the ClearCover story, or Kyle can catch that. But anyway, sorry, go ahead. But yeah,
I'd highly recommend listening. He's just a fantastic person. You know that. And we talked about it at the beginning of ClearCover. Like, my intention was to start something on the commercial insurance side. He probably did believe me, but he was probably like, yeah, that'll happen. Then 2 years in, I said, hey, it's time. And he was true to his word. He helped me in that transition, and couldn't have been more supportive. So big shout out to Kyle. And then, like I said, we focus on that core idea that I mentioned earlier, and really just bringing speed, simplicity, and service to the commercial segment by creating an insurance manufacturer and servicer that can hook into distribution no matter where it is, right? Like, we do that really well. We manufacture insurance, we own the insurance product, we own the tech product, and we own the servicing, and we can hook into whatever the distribution is. I don't care if you're a neo digital agent. I don't care if you're a brick and mortar agent. I don't care if you're a merchant services terminal. We're going to hook in these places and make it super easy to meet the policyholder where it's relevant to them, and make that risk transfer process super smooth.
So it's enabling both the traditional channel and wherever that's heading, all the new ways that insurance is starting to get put into different partnerships and marketing collaborations. And so you're not looking at a single path. You're thinking about, let's build something that can work however it's going to get transacted.
The quote unquote single path is partnerships. We are 100% partnership focused company. The only thing we don't do is D2C. We don't go that direct to consumer route. We're not spamming people with emails. Focused on that kind of stuff. We're more so just, hey, let's enable our partners to do this.
So it's using the word partnership as the definition, rather than we're in this channel and this channel. That you're seeing them all as, these are our partners, these are who we work with, and however they're working with the consumer, we want to support what they're trying to achieve and provide that coverage. Easy, simply, fast. You said it, but like, what do you say? Simple. You said like 3 words and you hit them perfectly every time.
Speed, simplicity, and service.
Speed, simplicity, and service. All right, the three S's.
Yep, S cubed. That's what we go with.
Nice.
Yeah.
So it is interesting, like when you were first talking about when you're at NCCI and the idea you had, a lot of us, I was in claims at the time, and every conference was like, when are the drone fleets coming to put us all out of work, or the AI robots, like, or the two combined, like flying AI is I guess is the end of life for us. There was a lot of that in the data side as well. And there were actually some carriers who had these pretty broad data science initiatives that ended up displacing a lot of underwriters, and they actually pulled back on them. It reminds me of like the 80s in auto manufacturing, like GM went hardcore on robotizing their plants and then had to unwind all that investment because it wasn't working. But you're thinking about, in those days, essentially things that other people might have said, this is going to put me out of a job. And instead you're looking at it as, this is going to make me better at my job. And when you talked about it from a distribution standpoint, again, that's something that people could say, this is the enemy, it's going to put us out of a job. And instead you're saying, what if we use this to bolster the channel instead of supplanting it? I think that's a really nice spin on same technology, but what if you used it as a jetpack instead of, something that's end of days?
That's exactly right. And I think we've all seen it, especially in the commercial space, right? Like these commercial risks are not entities that are just stagnant. They evolve over time. They're very different. And I would generally recommend that, especially as the commercial entity, the policyholder gets more mature, right? Goes from a sole prop, person who's doing some work on the side to like, maybe they're doing a little bit of a consulting firm. I'd recommend that they do go to an agent or broker, because their insurance needs are going to get more complex.
Yeah.
And what we build into the whole system that looks at the risk. And so we understand their employee counts, their revenue, payroll, all of these things, so that we can alert the agent and broker and say, hey, this person went from working at their home to working at a office that they're renting. Oh, now you probably need to go from a GL to a BOP. Hey, they went from a 0 employee count to a non-zero employee count. Let's make sure we give them workers' comp. All these things that now we can enable the distribution partner, the brokers, the agents, to make more informed decisions quickly, so they're not having to spend 3 hours catching up on a $1,000 policy, which is not going to be profitable for them.
Right. Yeah, I mean, that is $1,000 like package of policies, maybe even for a really small one. So it's selling that additional incremental policy at $700 or whatever it's a hard thing for them to justify unless they can keep it for 20 years.
Exactly.
And who knows? So to shorten that hurdle, that time frame where like you got to keep this for this long, given all the time you put into it, I think that's really critical. You're also allowing them to move out of being like transactional and logistical and being more advisory. So if they don't have to spend their time on the process of getting it done, if they're going to put in, an hour either way, what if they could spend that advising that small business on the transitions it's going through as it grows, or making smarter choices in that path? Like that's what every agent or broker wants to be. Is we don't want to be the placer. We want to be the business advisor, because that's who gets to stick around.
That's exactly right. And the way we say it is like we want agents focused on the relationship and the coverage recommendation, not on data entry, right? Like let us do the data entry. We can go get that information. You don't have to walk outside and measure the distance to the fire hydrant, right? You don't have to tell us if it's sprinklered. You don't have to tell us whether it's frame construction. We can get that information, right? Thanks to all the data sets that are out there right now. And when we do that, when we take that burden from the agent, again, it enables them to take that small amount of time that they can put anywhere into the thing that actually they're good at, right? Relationships, coverage recommendations.
So I want to talk about your focus area, small commercial. This is the battleground. This is where, because it's not really commoditized. I mean, you could sort of say it is. The products are fairly standard, et cetera, but like there's a lot of variation, differentiation, and innovation going on in this space. It's also every incumbent carrier I talk to who has any sort of growth plan that's, more than a couple of % a year, it's about small commercial. If it's not acquisition, it's about small commercial. Right. And you get a ton of startups pushing into this space and a lot of VC money into it. Why is small commercial the battleground that it is right now, and how's that going to play out? Because everybody who's pouring into it, they can't all. I mean, I talked to a carrier who's going to go from, in their plan, $1 billion to $5 billion in like 8 years, all on small commercial. I'm like, well, if everyone's going to do that, so you can't. Like the economy's not growing fast enough to support that. Like, how does this play out?
Correct. I think there are 3 to 4 reasons why we're seeing a big focus on small commercial. One, massive TAM, right? 31 million small businesses. And, I mean, average premiums of whatever, depending on what you lump into small commercial, right? Like you're looking 100 billion plus, right? It's massive market.
Yeah.
2, it's largely untapped. I see estimates of anywhere from like 40 to 60%, right, are uninsured or underinsured in that small commercial space. So massive opportunity to grab market share. 3, it's growing, right? Like we saw with COVID, obviously things took a dip, but then as we all know, coming out of it, we see a resurgence of these businesses. And additionally, with the gig economy and these new types of, this new sole proprietorship that's popping up, we can do more GL, bot policies, stuff like that. And 4th, the expense ratio is crazy high, and so there's which means the loss ratio is generally low. So it's a fairly profitable line. There's a lot more margin in that business relative to some of the more commoditized spaces with personal auto and homeowners. I think those are probably the 4 reasons why people are so excited to get into this space. A high expense ratio can also be indicative of a lack of innovation. And I think that's true, right? Like People are just keep doing the same thing. And so for those reasons, I think that's why it's the big battleground today.
Yeah. The low loss ratio, it almost allows you to be lazier on the expense side and to put up with, this is really we built this commercial lines engine, and it's really not made for the kind of throughput we need on the small business side, but the losses are so low, like, just, it's still profitable. There's no burning platform, which unfortunately is the story for too much in the industry. But it raises an interesting point on the expense ratio side, because the loss ratio is low. Like, I look at a lot of lines where people are squeezing on the expenses, and when you talk about disintermediation, it's like, oh, we're wasting all this money on commission. Like, I say wasted with quotes around it, but that's like this much of the equation. Your losses are 60, 70, 80%. If you could eke out 1 or 2 points of that, that's way more money than you're ever going to get through whatever lean exercises or layoffs or squeezing your distributors. But here's a different story: is the losses aren't all that material. I mean, there are pockets where they are, but there's plenty of lines where, I know carriers running 20, 30% loss ratios on several classes of business. So how far are you going to squeeze that? It's like it flipped it on its head, where now expenses do matter more, and you can make a material difference.
And now it's the question to the carriers is like, where do you want to squeeze on the expenses, right? Because as you said, right, like, there are some carriers who are running 20, 30% loss in LAE, but on the expense side, they're running fat.
They've made up for it, and then
And are they going to focus more on the distribution, that expense distribution, or are they going to focus more on the underwriting process? I don't know. Like, it's difficult. A lot of the legacy carriers, they have a difficult time of switching up processes when they're making, a 93% combined ratio. Why would they? Right? You can't tell a bunch of underwriters that you're going to fire them to lower expenses so that you can, bring it down to an 87. That probably wouldn't go over too well.
And at the kind of scale a lot of them operate on, those 7 points of profit, underwriting profit, are fantastic. Certainly in, like, when I was getting in the industry, you were lucky to write in the low 100s and then just make it up on investments. So to write in the low 90s is wild. Well, as you're saying this, I'm kind of wondering, can you actually separate out the systems from, like, can you separate the underwriting process heft, which I think is a technology issue, from the distribution costs? Like, it's not about, we're paying our agents 15%, we got to get them to take 14, or not willing to go to 16 when they ask for it, even if they're producing. It feels like it's the technology is the driver of how you move the distribution costs, not squeezing the commission. Is that kind of the idea behind what you're doing with all the enablement?
That's exactly right. I think one of the big reasons why we haven't seen this shift in literally, like, carving out small commercial as its own focus is because of the technology, right? Like, small commercial was created basically by copy and pasting mid-market. And they use the same system. And when you use the same technological system, it's going to get kicked out to an underwriter. The underwriter is going to go through the process and, the whole stack. And that's fine when you have a policy that's on average $80,000. That fixed cost relative to an $80,000, right? It's not that high. But when you move that policy to a $500 or $1,000, expenses shoot up very percentage-wise. And now they're still operating with the exact same tech stack, right? And so the processes are still going to happen. A lot of them are not willing to invest that much to carve out that small commercial end of itself. Some are, but it's expensive relative to the policies that are going to come in. And so, opportunity cost wise, they're probably making the wise economic decision to just say, let someone else deal with it. And then, they'll probably acquire, and then they can have their own separate thing. But who knows what their long-term plan is.
Do you think it'll ever go the other way where the small commercial solutions will be able to move up market? So it's kind of the instead of having to take, the hand-me-down systems from their older siblings, like, could the innovation in the underwriting side and the APIs and all that be used in the more complex risks, or is it just too different?
I think to a certain point, yes. So I think you can go from small to mid-market, going up to specialty. All of those use highly, those risks use highly customized enterprise systems, right? Like if you try and insure Walmart, you could probably do it, right? But they have their own proprietary system that you would have to get in, pull all the data from. It would be a huge fixed cost on the front end just to, write that policy. And they're going to shop like crazy anyway. You know how those bigger risks do. But I definitely think you can go from small to mid-market, especially as just software becomes more ubiquitous and more open source, right? The data's there and whatnot.
Yeah. It'd be interesting to see if carriers are waking up to that. Carriers that have that full spectrum, if they're starting to see that. Because then it's easier to make the argument to carve out the small commercial because it's good for it in and of itself. But then, there's a long-term additional payback. All right, let's not talk about competitors and how we can give them ideas for what to do.
Yeah, exactly.
So when we talked last year, whenever it was a while ago, it was still early days for you guys. Where are you at in your journey? And you're an MGA today, is that right?
Yeah, so we're an MGA. We have a few different balance sheets that stand behind us. As I said, we own the insurance product, so we build all the insurance products ourselves. We file them with the states. That's kind of one of the big things that we do well, create unique insurance products for these different distribution channels.
I can't imagine as an actuary that you would have it any other way. Like that, you should be doing that. So that's fair.
Yeah, that's exactly right. And we have an amazing insurance team who is of that same mindset. We are owners through and through. And then also on the technology side, we own the tech stack. Guidewire, Duck Creek, all of those, they're great systems. We want to be a little bit more nimble, not tie ourselves to someone else's backlog and innovation curve. And so when we find a really novel data set, whether we're looking at it or whether it's through a vendor, we want to be able to use it, test it, implement it ASAP, right? And our technology stack enables us to do that. We can also do some pretty interesting integrations because we own the technology and the insurance product, so we can kind of combine the two and make a really great experience for everybody.
So today, where are you from a state footprint and all that kind of stuff?
Like most people, the biggest holdout is New York and Massachusetts. No surprise there. But other than that, we're in all states, so 48 states, including DC.
So you got California before Mass?
Oh yeah, we got California.
So if anyone from the DOI in my home state is listening, just think about that.
That's right. Yeah, I hope they are.
Yeah.
But we have 3 different products right now: business owners, general liability, miscellaneous professional liability. We write. We started off very simply back when we were talking more like general liability, stuff like that, and we have Bob. But we've continued to add to the products into the classes that we're doing, to where we have a really great restaurant endorsement, all that stuff. And you know how this is. You want to start off fairly simple, and then you add on complexity as time goes on. You get more data, and you say, yes, I can expand in this class. So and because we built partnership first, we wanted to make Coterie like a one-stop shop for small commercial. So we write 70-80% of the classes out there. We're not doing bars and taverns yet, more E&S type stuff. But the plan is get more into that stuff so that we can bring this full solution on the small commercial side to our partners and really make their life really easy.
Yeah. So when I got a chance to work with some of your team on a piece around the agent channel, and you guys had put out a new way of doing the quote process was brilliant, and they didn't like it. And you guys figured that out pretty quickly. When you're trying to move the industry forward, how, you're still going to hit moments where, like, I'm looking in the corner at my printer, which is also a fax machine, and I've had to use the fax functionality partially because I work in this industry and partially for other reasons. But there are things that we do in insurance that are still stuck and old and work for people. So as you're trying to move forward and you're doing things with APIs and bringing data, and then you also need to work with folks who are not open to that or used to that or willing to work with that, how do you navigate that kind of situation?
Yeah, it's one of the things that I look at is like selfish disruption versus selfless disruption. Oftentimes we want to like stick it to legacy players and bring out these like crazy new things that are beneficial. They're really unique and neat, and they're going to improve your life. But you're probably doing it for the wrong reason, right? Like what we should be doing as people who are trying to change the space and move it forward is bring about innovative ideas that are going to help the current constituents grow the space, right? Like, and so you have these relics, we refer to them internally as relics, that aren't necessarily the optimal way, right? They are not, but they're things that like agents and brokers just hold on to, and they're like, this is so important to me. And we're like, okay, we're going to give that to you. We're going to put a little bit of a twist on it to make it even better and kind of coax you in this direction so that you will incrementally see the benefit that we're bringing over here. And some of them are going to hold on to that relic, right? And that's fine. We can still transact business like that. We're still going to make their life easier. And then I'd say the majority are going to start moving towards the other way. And when we focus on disruption as more of a benefit to improve the space rather than just like to show ourselves as these disruptive entities, like selfish disruption, I think we end up with an overall a much better benefit to the ecosystem and to the people who are utilizing the tools that we're providing.
It is really interesting to be in this space and hear you use words like selfish versus selfless. And one of the words that kept coming up with your team is like being humble about it. That really impressed me because it's a really easy space to stand in judgment of the way people have been working. Because from a modern standpoint, a lot of it just makes absolutely no sense. And they're sort of like, making a rod for their own back. Like you're making it harder on yourself. I remember a while ago at a carrier I was at, we had acquired a business where, the team was quite a bit older than the average age of our team. They were totally paper-based before. Like we actually couldn't bring their files in because our floor plate couldn't support the weight of their filing cabinets.
Oh, wow.
So we had to go through this whole like paperless transition before we could even move them into our offices. And they would get apps and stuff in PDF, print them out, and then scan them back to themselves. And we were looking at it, we're like, what are you doing? Like, well, we have to get it electronically for the records. And we're like, you had it, like you had a PDF. Just the idea of like, it was crazy, right? But to sit there and like laugh at them or be like, how can you not understand this is not going to help anyone move forward. So selfish versus selfless, being egotistical or conceited about it versus stepping back and be like, well, you know what, if they're older than us, look how much they've done for all this time. I need to have some respect for that. And that was really refreshing to me as I was talking to your team to understand you're trying to make this change. You're trying to enable things in an industry that struggled for that. So trying to navigate both sides of it. I wasn't surprised it came back to kind of culture and mindset more so than like, we just have better tech.
Yeah. It's something that I read in a book a while ago. And it wasn't necessarily related to insurance, but I use it with my life as well. And I sometimes think like, am I doing what I should be doing to get the end that I want? Right. And like I ask my toddlers this, right? Like, is this going to help you get what you want? Right? And sometimes we just like get on a platform and want to yell about how stupid everybody else is. And that is definitively not going to help move anyone forward or change anyone's mind to your cause, no matter how great your idea is.
Yeah.
Right. Sometimes you just got to like introduce a relic, right? Like sometimes you got to have a button next to the PDF that says save as an electronic file. It's like,
Right.
wait, isn't this? Yeah, but they don't know that. So let's make their job easier. Right.
Right.
And that's okay. Sometimes you have to come down and just be like, look, we're going to do this for you. It's going to make your life a lot better. It's going to take you in baby steps into that direction.
Has it been tough as a startup? I mean, you have to make a lot of decisions because you can't do everything. And to be fair, no company can. No one has unlimited resources, so you have to pick and choose. So has that cost you in terms of where you want it to be, or it's like, you know what, we are going to have to do this more slowly, or we're going to need more investment or different people or whatever, because you're trying to both move forward and be supportive of those who want to work the way they've always worked?
Absolutely. Like that's one of the biggest things. Like it's like you have this idea about where it can go, and then simultaneously you need to bring in these relics, these things that are bastions of like what people use. And you're like, all right, first off, how do I prioritize the new stuff?
Yeah.
And then secondly, like with that, how do I like should we prioritize the relics over them? And I believe and my team believes we should prioritize those relics while introducing the new stuff as well, but really like give the people what they can actually use, because if we give them just a bunch of new stuff, they're not going to be able to sell the policies, right?
Yeah.
They're not going to be able to service in the ways that they would. So we introduced a lot of these relics and prioritized those, but it was tough. I mean, it was tough because if we had more resources, we would have been able to bring out a full suite of things, apply multiple product managers to bring in these new things and help move people along, but it doesn't always work out the way you want it to.
Yeah. I mean, this is the complication of serving the industry, that you can have your feet in both, like the old and the new. And some are able to do just one or just the other. But because you're trying to bring a piece of the industry forward with you, you inherently have to do both.
Right.
So David, one thing I want to ask you before we end up is, we talked about kind of the battleground of small commercial. Where do you see things in 5 years, 10 years, like whatever the time frame, but where is this all heading? Is it like, does everyone get to win in this space because everything's so frothy and there's all this room to expand? Or is there something that's going to be the prevalent kind of winning idea down the road? And so whoever's on that, on that ship gets to sail there. I'm making that saying up. I don't think it's a real saying, but
I like it. We'll keep going with boating.
Yeah.
It's a pretty big ocean to continue with the metaphor, and we see it in personal lines, right, which is much more commoditized and no margin.
Yeah.
I don't think commercial will ever get to the point that personal auto is. Personal auto is the prime candidate for commoditized just because the risks are fairly unique and they change significantly over time.
Yeah.
So that's one thing that I think is going to stay the same. Like small commercial it will become more commoditized, but not as significantly as the personal auto space. Data is going to become key, and I think one of the things that I'm most curious about is how the technology systems are going. The Duck Creeks, the Guidewires, all these other vendors are going to accommodate the need that large carriers are going to have to take in novel sources of data so that they can do the type of stuff that a lot of the new players are going to be doing. I think we're pushing that envelope. We're bringing all kinds of stuff. It won't be long before carriers start demanding this from their vendors. And I mean, we know how much money they've sunk into Guidewire, all these other, like they're not just going to throw them out, and maybe they will, but people are going to have to change the technology system so that they can ingest tons of data and use it really quickly. So I think speed, technology and speed, like those things are going to increase significantly, which is going to put a lot of pressure on the carriers. They're built on a technology stack that they don't own. And so I'm very curious to see how they're going to respond to that.
Yeah. I was having a conversation yesterday. I agree with everything you're saying. And I think it's not, a lot of people are probably just thinking at the point of quote. So like when you're evaluating the risk, you have to get all this data, but we're moving into a place where that flow of data is going to be more dynamic and ongoing. And right now, your answer for a lot of this data is it's a spreadsheet in the notes, or it's like the API just makes a comment in the, like, that's not data.
Nope.
It's sitting, and as a claims guy, like we would deal with that where there's just an attachment in the risk record that you got to find. And so you're still back to PDFs and Excel and whatever. You can't really do anything intelligent with that. And that's a foundational structural shift in the whole architecture that right now, no one, no legacy player has any conception of how to do anything with. And I think actually a lot of the startups didn't necessarily build their own stacks that way either, but maybe they can change them because they own the stack. It might take a total rebuild. Who knows?
And also, a lot of the startups haven't necessarily owned the insurance product. So while they own the tech product, they don't really have any ability to change the insurance product as it is. So it's like, great, they get all this data, but are they actually able to do anything?
Right.
Maybe not.
Yeah.
That's tough.
I think this is, in small commercial at least, this is the most interesting thing that will develop over the next decade or so, is how does this all play out? And to the point of partnerships, like that's the source of data. If you're partnering with some merchant system, well, that system knows everything about your business always.
Yes.
Or merchant plus maybe HRIS, but like it knows, like, Toast or whatever, like knows everything about that restaurant all the time. That would be so interesting to pull in.
Well, and simultaneously, we have this going on the insurance side, this battlefield, and then on the SaaS side, we have this maturity of these software companies who are embracing the ecosystem approach, right? To where it's not just merchant services anymore. Well, it's much broader, right? It's like, we're going to give you a loan. We're going to be your HRS
all
system.
Of it.
We're going to do
and it all talks.
Yes. And it's the perfect, like we are at the perfect time for small commercial and insurance, right? And software to just come together. Yeah. And I agree. I think this is one of the most interesting times in insurance in general, like commercial specifically. Yeah.
Well, David, I think the kind of values words that you were using before about being selfless about it and having that humbleness, this is the moment where we really need to exercise that, because you got to be very open to all those possibilities and changes, or as an industry, we're going to stay pretty stuck.
I couldn't agree more. We hire on 5 things. One person has to have a superpower to meet the need that we have, and then the other 4 are core values: integrity, intelligence, passion, and humility. And the one sentence way we describe it is we're smart, energetic people who do the right thing and we don't brag about it. And that humility portion, it bolsters the other 3, right? Like coming into things with a paradigm of don't make this about me, right? Yeah. Let's make this about someone else. Let's elevate the customer experience. Let's help out my team members, right? That really makes it so that we can really view things from a perspective that I think is healthy to the long term of the industry.
That's what insurance is. It's not about you. It's about that person who's going through that thing or doesn't want to, and they need your help to make sure that doesn't stop their business in the first place.
That's right. You were on the claim side. You saw the front lines of that.
Yeah. I mean, I've dabbled around all of the different functions. So it's been a neat way to see how it all pieces together. But like, I think you're framing it perfectly. It really is ultimately about what we can be there for others, and how do we do that? I mean, going back to your original conception when you're at NCCI, like, how can I be better at this?
Yeah, that's right.
David, it's great to sit down with you again. And I'm glad that things have been going well for you guys. You never know, like talk to a company, you don't know who's going to exist or not down the road. And when we had that first call, I was like, it's a cool idea, but I like the values behind it. Yeah. So it's very good to see how you guys are doing well. And I hope that the regulators in my home state, by the time this comes out, at least see that too, and are supportive. But congrats to you, to the team, and wish you nothing but success going forward.
Thanks, Bryan. If you can, put in a good word for us at the Massachusetts DOI.
Yeah, I assume they all listen to the show. So hey, we're doing that right now. Awesome, David. Thanks so much for joining me.
All right, thanks, Bryan.
Thank you to David for joining me for the conversation, share a little bit more about Coterie, about what's going on in their particular market. And I loved the focus on values above all else, and that selflessness, humility, humbleness, so important. I challenge everyone to try to bring that into their world. That's how you spot the things that could make you better instead of standing in judgment of something. It's really critical. So kudos to Coterie for making that kind of at the heart of what they do. It's also really cool for me, having connected with David early days in what they were building. He and I were talking after the interview, and they were somewhere around 15, 16 people then, and they're nearly 10 times the size today. So for him, it's being so values driven, it's really great to see the opportunities that he can build for people on the team, and to be able to offer that out to even more people as they grow. So I know that's been really rewarding for him, and to build a team that has the feeling, the values, the culture that they've been building there at Coterie. So very cool to watch that. And it's neat to see how they're helping to push the industry forward while still actually respecting where it's coming from and doing that together to move forward. Really important stuff. I did mention the interview with Kyle Nakatsuji from ClearCover. If you want to check that out, that was during season 1. It's one of the early episodes. I will try to link to that in the show notes. And we go into the ClearCover story. And what I realized is, in that ClearCover story, it's also in the book, we talk about this conference room table that people at the first employees of ClearCover shared, that was like borrowed from a company they were borrowing office space from. And there's like some of the first hires. David was one of those people. So that was pretty cool, just hearing about, the early days at ClearCover as that was coming together. And of course, he decided, let's do it again, start another startup. So really exciting. Thank you to David, to Coterie, for giving him up for a little bit to do the interview. Thank you to VPay from Optum Financial for sponsoring this episode. Thank you to all of you for tuning in, for listening, watching, however you're consuming this. Please do share the show, rate it, give it a thumbs up or a like or a 5-star, whatever, in whatever platform. But tell other people about it too. That is how we spread the word and spread the thinking in this industry to help us all move ahead. So with that, I will finish things out here. Thank you for tuning in again, and I will be back as ever with another great interview for all of you next time. Thanks, everyone.